The silence that descended upon the Congress Center in Davos, Switzerland in January 2026 was not the respectful silence of an audience listening to a visionary. It was the suffocating silence of a boardroom realizing the company is being liquidated. When the phrase, "Canada only survives thanks to the United States," was thrown into the face of Mark Carney, the gathered elite of the World Economic Forum did not gasp because of the rudeness. They gasped because they recognized the sound of a structural rupture in the global operating system. For 80 years, the Western Alliance functioned on a polite fiction, the illusion of a partnership of equals, where the security of the smallest member was treated with the same sanctity as the security of the hegemon. In a single sentence, delivered not as a diplomatic opening, but as a statement of fact, that fiction was dissolved. A geopolitical analyst listening to those words did not hear a gaffe or a flash of temper. They heard a margin call. The United States was publicly announcing that the era of alliances was over and the era of the subscription model had begun. Security is no longer a right derived from treaties. It is a service derived from payment, and the price has just been adjusted for inflation. To understand the gravity of this moment, we must look past the personality of the returning president and look at the cold, hard machinery of the strategy being unveiled. We are witnessing the construction of Fortress America. This is not merely a military posture. It is an economic restructuring so profound, it makes the Industrial Revolution look like a minor market correction. The corridors of Davos were filled with whispered conversations among central bankers and defense ministers, not about climate change or diversity, but about the terrifying paradox that will define the next decade. The United States is achieving absolute tactical triumph while committing strategic suicide. They are building a fortress that is impregnable, fueled by an internal energy boom, and shielded by the most expensive defense network in human history, but in doing so, they are burning every bridge that connects them to the world. The cornerstone of this new fortress is the Golden Dome. While the media fixates on the science fiction aesthetics of missile defense, the financial press should be looking at the procurement contracts. This system, a layered architecture of orbital interceptors and directed energy weapons designed to neutralize hypersonic threats, is not simply a shield. It is the largest industrial stimulus package ever conceived. The Congressional Budget Office might publicly estimate the cost in the hundreds of billions, but the real numbers circulating through the prime contractors, Lockheed, Raytheon, SpaceX, tell a story of a $1.1 trillion injection into the American aerospace sector. This is Keynesian economics wearing combat boots. The United States is printing money to re-industrialize its defense base, creating a closed-loop economy where federal spending drives technological dominance. However, a shield of this magnitude requires more than just money and technology. It requires geography. This brings us to the physics of war that has suddenly turned the Arctic into the most contested real estate on Earth. If you trace the trajectory of a hypersonic glide vehicle launched from the Eurasian landmass toward the North American industrial heartland, the math is unforgiving. The shortest path does not cross the Pacific or the Atlantic. It crosses the North Pole. To intercept these threats during their boost phase, the only moment they are truly vulnerable, you cannot rely on interceptors based in Kansas. You need real estate in the Arctic Circle. This is the brutal logic behind the pressure campaign on Greenland. When Washington threatened 10% tariffs on European imports, escalating to 25%, it was not a trade dispute regarding automobiles or steel. It was a hostage negotiation regarding physics. The ultimatum delivered to Denmark and the European Union was stark. Grant the United States sovereign-level access to Arctic launch sites, or watch your export economies be crushed by the weight of American protectionism. This is the new geometry of immunity. The United States has decided that mutual assured destruction is an outdated doctrine. They are seeking to restore the nuclear monopoly of the 1940s, a state of existence where they can strike anywhere but cannot be struck in return. But the price of this immunity is the sovereignty of their allies. Europe, already buckling under economic stagnation, blinked. The framework deal announced shortly after the tariff threat is not a treaty among friends. It is a concession agreement signed by a junior partner. The message sent to every capital from Berlin to Tokyo is clear. You are no longer partners in a global project. You are tenants living on American strategic property, and the landlord has just raised the rent. While the diplomats wrestle with the military implications, a second, perhaps more devastating war is being fought in the energy markets. We call this the Watt War. The artificial intelligence revolution, which drove the stock market valuations of the mid-2020s, has collided with the laws of thermodynamics. Data centers are not clouds. They are physical factories that consume electricity with the appetite of aluminum smelters. The training of a single next-generation model requires gigawatts of consistent baseload power. This is where the divergence between Fortress America and the rest of the West becomes fatal. For the last decade, Europe has invested trillions in a green transition focused on intermittent renewables, wind and solar, which are ideologically pure but physically inconsistent. The United States, under the guise of energy dominance, has taken a different path. The deregulation drive of 2025 was not about removing red tape for the sake of ideology. It was a strategic mobilization of resources. By fast-tracking natural gas pipelines, uncapping oil production, and most critically, using categorical exclusions to bypass environmental reviews for new nuclear reactors, the United States has created an energy arbitrage of historic proportions. American industry now pays a fraction for energy compared to their German or British counterparts. The result is a hollowing out of the European industrial base. Manufacturers are not moving to America because they love the culture. They are moving because they cannot mathematically survive in a jurisdiction where electricity prices fluctuate wildly based on the weather. The United States is winning the AI race not because of better code, but because of better physics. They have the power to run the machines, and they are refusing to share it. This energy dominance feeds directly back into the geopolitical leverage. When Donald Trump mocked the European Green Deal, he wasn't just scoring political points. He was highlighting a strategic trap that Europe built for itself. The continent dismantled its nuclear fleet and banned fracking, assuming a world of global cooperation where energy could always be imported. That world is gone. Now Europe finds itself caught between a hostile Russia, an indifferent Middle East, and a predatory United States that views its energy surplus not as a public good to stabilize the West, but as a competitive advantage to reshore global manufacturing. The fortress is not just keeping missiles out, it is sucking capital in. Nowhere is this shift from partner to vassal felt more acutely than in Canada. The relationship between Ottawa and Washington was once cited as the gold standard of international cooperation, the longest undefended border in the world, an integrated economy, a shared culture. But the ultimatum delivered at Davos exposed the fragility of that integration. When 75% of a nation's exports go to a single customer, that nation is not a sovereign state in economic terms. It is a branch plant. For decades, Canada relied on the friendship discount. They assumed that their strategic alignment with Washington meant they were exempt from the harsh realities of American protectionism. That discount has been canceled. The psychological shock to the Canadian political establishment cannot be overstated. Prime Minister Mark Carney's frantic attempts to rally a coalition of middle powers is a rational diplomatic response, but a weak economic one. A coalition of Canada, Japan, the UK, and Australia is a coalition of energy importers and demographic decliners. They are trying to pool their weaknesses to create strength. The reality is that capital markets have already priced in the new status quo. The Canadian dollar is decoupling from oil prices and trading on political risk. Investors are realizing that if the US border thickens, if tariffs are applied even as a negotiating tactic, the Canadian business model collapses. The branch plant economy only works if the branch has access to the headquarters. Without that access, the assets are stranded. The realization that Canada is defenseless, both militarily and economically, without American benevolence, is the kind of existential dread that topples governments and rewrites constitutions. But if the immediate victim of this strategy is the Western alliance, the long-term beneficiary may well be the silent observer in the room, China. The narrative in Washington is that this fortress strategy is designed to contain Beijing. In reality, it may be handing them the keys to the rest of the world. The Chinese strategy in 2026 is not one of confrontation, but of patience. They are playing the role of the vulture capitalist, waiting for the distressed assets of the Western alliance to hit the market. Beijing's internal analysis of the Davos ultimatum is celebratory. For years, Chinese diplomats have toured the global South, Africa, Latin America, Southeast Asia, selling a specific narrative, that the West is hypocritical, that American talk of a rules-based order is a cover for hegemony, and that Washington has no friends, only servants. By publicly humiliating its closest allies, by using tariffs as a weapon against friends, and by turning security into a transaction, the United States has confirmed every talking point in the Chinese propaganda handbook. Beijing doesn't need to outspend the U.S. military. They just need to offer an alternative to U.S. bullying. As the United States pulls inward, focusing on its golden dome and its domestic industrial boom, a vacuum is created in the global commons. We are seeing the acceleration of the BRICS plus bloc, not as a coherent ideological alliance, but as a union of the ostracized. Brazil, India, Saudi Arabia, these nations are looking at the humiliation of Canada and Europe and drawing a simple conclusion. We must diversify. We cannot be dependent on a dollar system that can be weaponized at a whim. We cannot rely on supply chains that run through a fortress that might close its gates. The result is a fragmentation of the global economy. We are moving from a single integrated global market to a series of walled gardens. The United States will have the richest, most secure garden, but it will be a lonely one. This brings us to the ultimate paradox of the fortress trap. History is littered with empires that prioritized invulnerability over connectivity. The Great Wall of China, the Maginot Line, the Soviet Iron Curtain, these were all projects designed to create absolute security. In the short term, they worked. They kept the enemy out. But in the long term, they kept the future out. By insulating itself from the dangers of the world, the United States is also insulating itself from the vitality of the world. The network effect of the US dollar, the fact that it is used by everyone everywhere, depends on trust. It depends on the belief that the system is open and fair. When you turn the financial system into a weapon to enforce loyalty, you encourage your users to find a competitor. The Pyrrhic victory whispered about in the lounges of Davos is exactly this. The United States is winning the battle for 2026. Its economy is roaring, its borders are securing, and its enemies are deterred. But it is losing the war for 2036. By signaling that it cares only for its own hardened perimeter, it is forcing the rest of the world to organize without it. We are witnessing the end of the American empire and the birth of the American fortress. The empire was based on soft power, trade, and alliances. The fortress is based on hard power, energy, and intimidation. If the Golden Dome is the shield and the energy grid is the engine, we must now examine the fuel injection system, the United States dollar. To understand how Washington plans to pay for a $1.1 trillion defense layer while cutting taxes and deregulating industry, we have to leave the geopolitical map and enter the bond market. This is where the Fortress America strategy shifts from a military gamble to a financial highwire act that terrifies every central banker from Frankfurt to Tokyo. The question whispered in the corridors of Davos was not just why are they doing this, but how are they affording this? The answer lies in a radical shift in monetary doctrine. For decades, the U.S. Treasury operated on the assumption that debt mattered. The new doctrine, quietly adopted by the administration's economic team, is that debt is irrelevant as long as you control the underlying assets of the future. By cornering the market on AI compute, energy production, and space-based defense, the United States is effectively securitizing its technological dominance. They are betting that global capital will have no choice but to flow into U.S. treasuries, not because the balance sheet is healthy, but because it is the only safe harbor in a world set on fire. This is the dollar milkshake theory weaponized. As Europe deindustrializes and China faces a demographic cliff, capital flees those jurisdictions. Where does it go? It goes to the fortress. The administration is counting on this influx of foreign capital to fund the Golden Dome. In essence, they are forcing the very allies they are alienating to pay for the wall being built between them. It is a cynical, brilliant, and incredibly dangerous feedback loop. Make the world more dangerous, so the world buys more of your safety. But this creates a secondary casualty, the euro-dollar system. The plumbing of global trade relies on offshore dollars, credit created by European and Asian banks to facilitate trade. By aggressive reshoring and sanctioning, Washington is drying up this liquidity. We are seeing the beginning of a liquidity crisis in the Eurozone that makes the 2008 crash look like a minor overdraft. European banks are sitting on portfolios of green assets that are plummeting in value, while being starved of the dollar collateral they need to remain solvent. The rupture Mark Carney spoke of is not just diplomatic, it is a solvency crisis for the Western banking system outside of New York. While the nation-states argue, a new political entity has emerged fully formed from the chaos, the Technoindustrial complex. In the 20th century, we had the military-industrial complex, a partnership between government and defense contractors. In 2026, we have something different. We have the fusion of the state and the algorithm. Look closely at the contracts for the Golden Dome. These are not traditional procurement deals. They are mandates that effectively grant companies like SpaceX, Palantir, and Anduril quasi-governmental status. When a private company controls the satellite constellation that provides the only early warning system for nuclear attack, that company is no longer just a vendor. It is a branch of government. This shift was visible at Davos. The tech CEOs were not there to lobby regulators. They were there to dictate terms. The narrative has shifted from regulation to integration. The fortress strategy relies on the speed of Silicon Valley to outpace the mass of Beijing. To achieve this, Washington has effectively deputized big tech. Antitrust cases have been dropped. Mergers are approved in days. The message to Silicon Valley is simple. Help us build the shield, and you can write your own rules. This has profound implications for the concept of democracy. We are moving toward a form of corporate Caesarism, where critical infrastructure, currency, defense, energy is managed by a consortium of unelected technocrats aligned with the executive branch, bypassing the slow deliberation of Congress. For the average citizen, the trade-off is clear. You get safety, cheap energy, and a booming stock market, but you lose the ability to influence the machine. The fortress is not a democracy. It is a command economy disguised as a free market. If the Arctic is the roof of the fortress, Africa is the basement where the pipes are laid. The media ignores this front, but the commodity traders do not. The production of the Golden Dome's interceptors, the batteries for the AI data centers, and the alloys for the reindustrialized Navy require specific elements: cobalt, lithium, tantalum, and rare earths. For 20 years, the West allowed China to monopolize the African supply chain. That era of negligence is over. The U.S. response, however, is not to build schools and hospitals to win hearts and minds, as the Chinese did. The U.S. response is kinetic and transactional. We are seeing a surge of private military contractors securing mines in the Congo, Zambia, and Niger. This is the dark side of the green and AI revolution. The clean digital future of the West is built on the dirty, kinetic reality of resource extraction in the South. The script for 2026 involves a series of proxy conflicts across the Sahel and Central Africa. These are not ideological wars. They are corporate takeovers with gunfire. The United States has signaled it will no longer tolerate Chinese exclusivity in critical minerals. When Washington speaks of diversifying supply chains, they mean seizing them. This puts African leaders in an impossible position. The non-aligned movement is being resurrected, but it is toothless against the raw pressure of the two superpowers. We are returning to a 19th century scramble for resources, but instead of flags, the invaders are planting mining rigs and server farms. The volatility in these regions will spike, sending shockwaves through the commodity markets. Smart money is already going long on defense stocks and mining conglomerates with U.S. security clearance. We must turn the camera inward now. A fortress, by definition, restricts movement. It restricts the flow of goods, people, and ideas. The economic boom trumpeted by the administration is real, but it is uneven. We are witnessing the bifurcation of the American economy into the protected and the exposed. The protected are those inside the fortress walls, the aerospace engineers, the AI coders, the energy workers in the Permian Basin, the owners of capital. For them, 2026 is a golden age. Wages are skyrocketing, asset prices are inflating, and the future looks bright. The exposed are those dependent on the old global order. The logistics workers at ports handling fewer imports, the farmers who have lost their export markets in China and Europe due to retaliatory tariffs, the service sector workers crushed by the inflation that comes from deglobalization. Inflation is the ghost in the machine. You cannot reindustrialize a continent-sized economy in 5 years without creating massive inflationary pressure. The cost of goods is rising. The administration's answer is to suppress data and control narratives, blaming foreign speculators for price hikes that are actually caused by domestic policy. The social contract is fraying. The Golden Dome protects against missiles, but it does not protect against civil unrest. The militarization of the border is not just about keeping migrants out. It is about keeping labor tight. The restriction on immigration is a deliberate lever to drive up wages for the essential industrial workforce, buying their loyalty while abandoning the service class. This is the Peronism with American characteristics that analysts are struggling to model. It is a populist, nationalist, industrial strategy that rewards loyalty to the project and punishes dissent. No script is complete without asking, what goes wrong? The fortress strategy assumes rational actors. It assumes China will calculate the odds and retreat. It assumes Europe will grumble but submit. It assumes the American public will tolerate inflation in exchange for glory. But history is not driven by rational actors. It is driven by accidents. There are 3 specific black swans hovering over 2026 that could turn the fortress into a prison. First, the cyberkinetic event. As the West relies more on the digital architecture of the Golden Dome, it creates a single point of failure. A coordinated state-sponsored attack on the U.S. power grid or the satellite constellation does not need to destroy the hardware. It just needs to confuse the software. If the Golden Dome goes blind for 10 minutes, the entire geopolitical calculus collapses. The reliance on AI creates a vulnerability to data poisoning, the injection of false information that causes the system to attack itself or shut down. Second, the Saudi pivot. The petrodollar is already dying. The fortress strategy might kill it. If Saudi Arabia, seeing the U.S. weaponize the dollar against Europe, decides to price oil exclusively in a basket of BRICS currencies, the inflation in the U.S. goes from manageable to catastrophic. The U.S. energy independence protects it physically, but the dollar's value is derived from global usage. If the world stops using dollars for oil, the trillion-dollar defense spending spree becomes a hyperinflationary death spiral. Third, the European collapse. Washington assumes Europe will stagnate but remain stable. This is a dangerous bet. If the economic pressure triggers a wave of chaotic defaults in Italy or France, or a radical political revolution in Germany, the contagion will not stop at the Atlantic. A disorderly breakup of the EU would destroy the asset values of the U.S. banking sector. You cannot bankrupt your biggest customer and expect your own revenue to stay flat. As we conclude this analysis of the Davos 2026 revelation, we are left with a picture of a world transformed. The global village of the 1990s has been razed. In its place stands a landscape of fortified citadels and lawless badlands. The United States has made a choice. It has chosen survival over leadership. It has chosen power over influence. It has chosen the certainty of steel and code over the ambiguity of treaties and trust. For the investor, the lesson is clear. The alpha is in the fortress. Invest in the things the fortress needs to survive: defense, energy, computing, and critical minerals. Avoid the things that depend on the old world of free trade and open borders. For the citizen, the lesson is harder. The world is becoming sharper, colder, and more dangerous. The end of history has ended. History has returned with a vengeance, and it is wearing a suit of armor. When Mark Carney spoke of rupture, he was trying to warn us that the fabric of the world was tearing. He was right, but he was wrong about the outcome. The rupture is not an accident. It is the design. The United States is not drifting away from the world. It is actively pushing off from the dock. As the distance grows and the lights of the fortress fade into the mist of the Atlantic, the rest of the world must now answer the question that Trump threw in their faces: can you survive without us? For the first time in 80 years, the answer might have to be yes, because the alternative is not partnership. The alternative is submission. And for nations with memory, submission is just a slower form of death. This is the state of our world: a trillion-dollar gamble, a shattered alliance, and a new empire rising not from expansion, but from isolation. Welcome to the age of Econ empires. Watch your portfolio, watch the Arctic, and most of all, watch the walls, because they are closing in.